In this topic, we're gonna look at what fraction theory is. So with the help of fraction theory, we can decide whether we want to do a long trade or short trade. So let's look at an example of Euro USD. So when you look at the currency pair, it is actually written in a fraction because it's actually Euro divided by USD, and that's what's happening. But instead of writing on the top and bottom, they just go like this, and that's what the fraction is about. So here the euro is the numerator, and the other USD is the denominator. So if the numerator becomes bigger while the denominator keeps at the same place, the fraction becomes bigger. So this means the euro is strengthening, and for whatever reason, and the currency pair will go higher. And the euro can strengthen for different variety of reasons. You want to see previous modules for that. And if the denominator becomes bigger while the top half, which is the numerator, keeps at the same place, then the entire fraction becomes smaller. This means that the US dollar is strengthening for whatever reason again, and the currency pair is heading lower. So if, for example, if we put a strong currency in numerator and weak, strong currency in numerator and weak currency denominator, then we want to go long because it's uptrend. And the opposite is true. If weak currency is in numerator and a strong currency is in denominator, we want to go short because it's downtrend. So let's look at an example. So for example, the Fed Reserve in USA made announcement which is positive, and it could be any kind of announcement leading that shows that the US currency is gonna go to their target or whatever they're doing. It's a positive news, so we'll just call it positive news in USA for USD. Then there is an announcement. So these are two announcements, announcement number 1 and then announcement number 2. So in Spain there was bad news. I'm going to take an example of GBP. In UK there is some announcement which leads to negative effects on the currency. You want to see my previous module which I talked about the what affects the currency's value to devalue and the deficit trade and all that in the previous module, and then that way you will know that whether this is a good news and whether it's going to devalue the currency. So now effectively we have a strong news. So this is a strong indicator, and this is a weak indicator. So effectively what we want to do is we want to match the strong indicator with weak indicator. So in this scenario we've got a strong USD and weak, and this is possibly, there could be other factors, but this is the basis of pairing a currency and then making a decision based on this news. So we've got a possible weak GBP coming up, And this is also bullish, because the bullish is strong, and this is a bear. Bear is also strong, but bear also kind of runs away, as opposed to bull. He wants to attack you, and it's strong and it's going to go up. So this is a bullish movement trend, and this is a bearish. We call it bearish.